expect that to be reduced. And then at the same time, you do have institutions turning towards crypto. And unlike retail, they're battleships. They're not speedboats, right? They take years to turn. One of my favorite statistics and most painful statistics is the average Bitwise customer allocates after about 8 to 10 meetings. If you think about what that means for a pension fund that started looking at Bitcoin when the ETF launched, they haven't gotten through 8 quarterly meetings yet. That's the speed. They'll get there in 2026. So I do think for that reason, the cyclicality will be compressed. There'll still be volatility, but I don't think we'll see 70% drawdowns.
Crypto is no longer a chaotic, unpredictably changing environment. This is neither an accident or a frenzied, hype-driven situation. The well-planned upsurge was let loose by BlackRock, the financial giant whose holdings exceed those of entire countries. They didn't simply enter the cryptocurrency space when they flicked the switch. They took charge and changed the game's regulations. This is not an impromptu bull run. It's a carefully planned storm that will permanently alter the direction of money. No one knows this better than Bitwise's most astute intellect, Matt Hougan. Years have passed since cryptocurrency was a fringe experiment, yet it is just now emerging as Wall Street's covert weapon. The companies who initially mocked Bitcoin and disregarded blockchain are now the ones planning its future. Goldman Sachs, Fidelity, and BlackRock are not sitting on the sidelines. They are constructing the power structures, goods, and pipelines that will rule digital finance for many years to come. Regulated ETFs, tokenized assets, and stablecoins. Wall Street is erecting a fortress around cryptocurrency, and these are the new bricks. The focus of the game has changed from irrational guesswork to strategic control, where each action is planned for optimal impact and financial gain. Unaware that they are riding a wave driven by forces outside of their line of sight, retail investors applaud price surges. It's more than just a bull run. The driving force behind this financial revolution is BlackRock. A new empire is emerging as the old one collapses. One in where cryptocurrency serves as the foundation for everything, not just money. Matt claims that the takeover has begun and that the switch has been flipped. To learn more, let's now view snippets from Matt Hougan's interview. Remember to subscribe, like, and turn on notifications for more in-depth material. We appreciate your return. Take in the remainder of the video.
Is going to be more stable in the past. I think some of the factors that drove that boom and bust are now diminished. So an example of those, I think the impact of the halving is smaller, just mathematically. It's half as big each time. I think if you look at the interest rate cycle, we're at a different point in the interest rate cycle than we were in the 2022 and 2018 bear markets when interest rates were going up. Now they're as liable to go down as up, right? So that's a different situation. And I do think that the advent of regulation will reduce the blow-up risk that has been the catalyst of so many sharp pullbacks, right? If you go way back in time, what caused the blow-up in 2014? It was Mt. Gox collapsing. What caused the blow-up in 2018? It was ICOs being shut down. What contributed to the blow-up in 2022? It was a cavalcade of disasters. Luna, FTX, 3 Arrows Capital, et cetera. Now that we have, and as we get better regulation, you would expect that to be reduced. And then at the same time, you do have institutions turning towards crypto. And unlike retail, they're battleships. They're not speedboats, right? They take years to turn. One of my favorite statistics and most painful statistics is the average Bitwise customer allocates after about 8 to 10 meetings. If you think about what that means for a pension fund that started looking at Bitcoin when the ETF launched, they haven't gotten through 8 quarterly meetings yet. That's the speed. They'll get there in 2026. So I do think for that reason, the cyclicality will be compressed. There'll still be volatility, but I don't think we'll see 70% drawdowns. Yeah, it's alt season in the traditional capital markets for sure. Bitcoin Treasury, ETH Treasury companies, IPOs. I think that's part of it, Andrew. And part of it is like, look, a lot of people moved into the market when Bitcoin ETFs launched in January. The traditional alt cycle was like people would buy Bitcoin, it would go up, they would get wealthy, and then the capital would flow downhill into riskier assets. People bought Bitcoin ETFs, they got wealthy, and the capital is flowing downhill into riskier assets, but within the TradFi ecosystem, because that's where that capital is, right? And that's part of what explains why we're getting ETH Treasury companies and now Sol Treasury companies and everything else. It's the same altcoin cycle. This isn't my idea. I've borrowed this idea from Scott Melker, But I think there is this TradFi altcoin season going on.
Yeah, that's a great.
Yep, absolutely. Overlooked, absolutely. Yes, there are a number of really interesting projects that are overlooked. I think there's a quiet DeFi boom that's being overlooked to tie into the title of this. You know, you look at Uniswap volumes versus Coinbase volumes in Q1; they were higher. Never happened before. You look at what's going on Aave, right, through the moon. You look at Ondo. So I do think there are pockets of the altcoin market that are being overlooked because the hot ball of money can't get to them. And I'm pretty excited about those pockets. I mean, look, Bitwise is trying to build the iconic crypto asset manager, right? There's specialist asset managers in each area of the market. We think that space is open in crypto. There are a few other firms that do it very well as well, but we want to be that. Whether that means being private or public, that's actually above my pay grade. But I'm here to build, the iconic manager for crypto. We're here for the long haul.
At least 5 cryptocurrency unicorns are expected to go public. According to one of Matt's major forecasts for 2025, it's more than a hunch. It's already beginning to take place. Major names like Kraken and Chainalysis are in line, while companies like Circle and eToro are already in motion. According to Matt, regulatory barriers caused this wave of IPOs to be postponed for years. For instance, Circle has made several attempts to go public, but the SEC has blocked it up to this point. Following a change in the atmosphere, several businesses hurried to become public. The price of Circle's IPO has already increased 8 times and was 25 times oversubscribed. Now, in a dead market, that kind of interest doesn't occur. The same factor that has always fueled market demand is also fueling this interest. According to Matt, financial advisors and institutions are looking to gain exposure in the cryptocurrency field, but many are still uneasy about directly owning tokens. So they are turning to publicly traded companies that operate in the market, businesses that provide a more recognizable and secure entry method. For this reason, IPOs and crypto equities ETFs are becoming more popular. Matt also raised an important topic regarding stable currency. The majority of investors were unaware of what a stablecoin was until a few months ago. It is currently being discussed on CNBC. It is being covered by sell-side research analysts. Because stablecoins are simple to comprehend, they are becoming more widely accepted. They are comparable to dollars, but speedier and more widely used. According to Matt, this ease of use is enabling conventional investors to finally understand cryptocurrency, which is causing a larger change in the way that people view the technology. To gain further understanding, let's view other snippets from Matt's session.
Yeah, absolutely. Loved making those predictions. I like calling us out for being specific. We like to be able to be measurable on our predictions. We won't get them all right, but I think it's better than being general.
Yeah.
On this one, we really saw 2 things at work. So on the one hand, we were optimistic on the outlook for crypto. And if you're optimistic on the outlook for crypto, you think the market for companies building in this space is growing and substantial and there to be. The other factor that went into that prediction is that the IPO market was severely repressed by US regulators for the 4 years prior to this election, right? Circle, as an example, which for what it's worth has been the most successful IPO in the US in, I think, 10 years, right? It was 25x oversubscribed. The price has gone up 8-fold. It's been huge. It tried to go public for 3 or 4 years, but the SEC wouldn't let it out. And so we saw all of these firms that were substantial in size, whether it's eToro or Circle or Kraken or Chainalysis or some of the others that are in the pipeline, that were sort of just waiting at the door. So once that regulatory environment changed, we thought they would run out. Now, I do think it's primed for this moment we're in, because there are a lot of professional investors, institutional investors, financial advisors who want exposure to crypto, but are more comfortable with these companies. And I think that these IPOs and crypto equity ETPs are feeding into that group that want exposure because they know crypto is happening, but maybe their risk departments aren't comfortable with owning Bitcoin. But you can have exposure to Circle, you can have exposure to Coinbase, you can have exposure to some of these pre-IPO companies. So we think this trend is going to accelerate. Yeah, I absolutely think that's true. Stable coins are sort of a skeuomorphic tool for crypto. There's something that matches our existing understanding of how finance works, but just makes it faster, quicker, better. I find that traditional investors can understand stable coins faster than they could understand Bitcoin, and certainly faster than they understood something theoretical like blockchain. that you were
Yeah.
trying to describe how this technology worked. It's like, no, here are dollars that move at the speed of light and settle instantaneously around the world. And people say, oh, that's cool. So I do think it's really helped with the vibe shift. I think it's made crypto real.
Yeah.
And it's also brought in Wall Street, which is important because it solidifies the regulatory environment for crypto, right? It's no longer crypto versus Wall Street, it's crypto and Wall Street. And that means that Washington is now pro crypto on a long-term basis. And that's been the other major vibe shift that I think it's brought on. It's exactly right. This is like the moment when Walmart realized it needed to build a website to compete with Amazon, right?
Yeah.
Now you have Visa, MasterCard, PayPal, Goldman Sachs, everyone realizing that they need to be ready for this era, that we could be dealing with, multiple trillions of dollars of stable coins and multiple trillions of dollars of tokenized real world assets in the next year or two, right? I mean, it's moving at that speed. So I do think that is a major fundamental shift. I do think it's akin to the internet going mainstream. And I don't think we'll ever put the genie back in the bottle. I think now that we're through, it's now part of our mainstream financial infrastructure in a really fundamental way.
This leads us to for the majority of this cycle, Ethereum trailed Bitcoin. It was forgotten. However, that has altered recently. According to Matt, the Ethereum Foundation's leadership change marked a sea change. The network began to move more quickly. Subsequently, Tom Lee declared Ethereum to be the stablecoin chain. Ethereum was rebranded for a wider audience with the use of that framework. It's more than just buzz, though. It is supported by concrete data. ETFs and companies have purchased 32 times as much Ethereum since May as the new supply being mined, Matt noted. Over the past 18 months, Bitcoin's price has increased due to the same supply and demand imbalance. This is currently the case with Ethereum. Bitwise observes an increase in Additionally, the value of Ethereum treasury firms' net assets has doubled. That means there will be increased demand. Matt believes that Ethereum will reach new all-time highs. Although it might not reach $15,000 as Tom Lee had projected, he thinks Ethereum might beat Bitcoin for the remainder of the year. The essentials are present: rising use, growing demand, and a bigger part in the financial system. Ethereum is already the foundation for almost 90% of stablecoins and tokenized real-world assets. Additionally, as Matt stated, holding Ethereum is equivalent to owning a portion of the internet itself if you think the entire ecosystem will expand. However, there are still difficulties. There are scaling problems with Ethereum's main chain. The majority of activity takes place on Layer 2 networks, which adds complexity. The direction is obvious, though. The majority of the innovation is taking place on Ethereum. Ethereum may also be the most straightforward option for investors who wish to have wide exposure to the rise of crypto. Matt now tackled the more general query. Is cryptocurrency at last prepared to transcend its cycles of boom and bust? Yes, he believes. A brittle system was indicated by the triggers that led to previous crashes, including FTX ICO shutdowns and Mt. Gox. However, he thinks the market is stabilizing as institutions gradually enter the market and regulations improve. Although the drawdowns might still occur, they might not be as severe as they were previously. Additionally, the surge may level off as more money enters the cryptocurrency market through regulated methods. The danger still exists. Although there haven't been as many capital inflows into the altcoin market this cycle, Matt sees this as an opportunity. Volumes for projects like Uniswap are more than those for Coinbase. Quietly, Save and other DeFi names are expanding. IPOs and ETFs may be the focus of the hot money, but underappreciated segments of the cryptocurrency industry might be the next. Price is no longer the only factor in crypto. It has to do with adoption, legislation, and infrastructure. And if you believe Matt Hougan, Wall Street's awakening is just beginning. Thank you for viewing, and please remember to subscribe and like.